Today's episode of Wine and Dime is sponsored by Rooted Planning Group, a fee-only financial planning firm that believes life is about events, supported by your dollars and cents. And we want to help you achieve your goals. Hop on over to www.rootedpg.com to learn more about the services. Every week, it's my goal to share financial information that helps you in both your life and Financial Vineyard. We hope it takes you from your roots to the journey of your vines and the influences in the air that have helped craft your delicious life. Like wine, life and finances have different palates that should be celebrated and not judged. Well, welcome to the show, Kim. We're so thrilled to have you here. For those of you that missed the intro, I have Kimberlee Davis here joining us today on the podcast. We are super thrilled to have her. And of course, before we get going on the podcast, I have to ask, because of where you're located, is there a particular wine that you absolutely adore and love that you'd like to share with our listeners?
Well, that's a very good question. Giving the title of the podcast. Thank you, Amy, for having me on. Believe it or not, I am a big fan. It's not a super expensive wine, but I'm a big fan of Hitching Post, which I believe comes from Santa Barbara, Paso Robles area. It's affordable, it's good, it's not too heavy, and it's a really nice Pinot Noir. And if you watched the movie Sideways, I believe it was featured in that movie way back when.
Well, we like affordable, being that we also like to talk about finance in this podcast. So
exactly.
We appreciate that tip.
So it's my go-to wine. I really like it because it can be paired with all kinds of different food. And I'm not a big fan of heavy Cabernet, so I kind of stick to the Pinot Noir. And I really like it. And it's just funny because when I watched that movie, that they were there, I think at the winery. I don't know if anyone else remembers that movie, but anyway.
It's fun to have a reference point too, and to say, oh, well, I actually like the wine from that place that was in that movie.
Yeah. And it's really good. So I just had some last night, by the way.
And if it wasn't 3 hours earlier, maybe you'd have some today. But
the countdown is occurring. It's got to be 6 o'clock somewhere in the world.
I think over in Europe right now. Yeah. So, well, the reason that we are thrilled to have you on the show too, in addition to the wine pick that you shared with us, is you have a unique mission that you are setting out to be. You have a background in finance as a wealth manager, and you also have a book that you've released. You have a website, Fiscal Feminist, that I would love for people to go out and explore. But you have a lot going on that's really around education and trying to get women feeling comfortable with money. And so I'd love to share, or have you share, your journey into this profession and your journey in life that has driven you to sort of develop this path.
Absolutely. Well, you are 100% correct that I am super passionate about this. I think that it is super important for women to change the narrative and to become comfortable with understanding their situation with money and to take charge and become CEO of their lives, even if they are in relationships or they're married or if they have partners. We have to understand our finances, and we also have to understand our relationship with money and how it is woven into the tapestry of our other relationships that we have with people in our lives. So if we are not on top of it, it can get the better of us, and it can, it has a way of just infiltrating things in a way that we may not be aware of until it's too late. So this is something I learned through my own personal journey that has gone over many years. But I began my career as a corporate securities lawyer in the 1980s. I went to Georgetown Law School. I was a kind of an economics and finance person, but I went to law school and then I became a corporate securities lawyer. So I was in that realm for several years. And then I segued into investment banking because I decided I was tired of writing these massive S1s for initial public offerings. And I wanted to get more involved in the negotiation of the deal itself, not just kind of memorializing the deal as lawyers tend to do. And I did that for a while. And then I got married. to a man that I met at the law firm, because if I had met him at the law firm, I probably wouldn't have met him because I worked about 90 hours a week. And we got married, and we had three lovely daughters who are now all in their late 20s and early 30s, two of whom are lawyers. And I then, decided to step away from the workplace a little bit because at that point, he was in private equity at the time. He switched over from the law into private equity. And we lived in Westchester County, New York. So the commute to New York City was quite a bit. So there was just no one to really be home with the child if one of us didn't kind of step away a little bit. But then, soon after my third daughter was born, he was offered this opportunity to go to London to start a private equity group there for a major bank. And I really didn't want to do it because I was very happy in Westchester County. And then I was expecting to go back into the workforce. But I agreed to do it because it was a 2-year commitment, or so I was told. And the long and the short of it was, it ended up being for my end a 14-year commitment. He actually still lives there. And that was a decision that kind of changed the course of my life in some ways that were not beneficial to me because it really removed me from the ability to do my career. So fast forward, 14 years later, I decide, my eldest daughter's about to go to Georgetown University. My other two are in high school. And I decide that with the children's input, the three of us are going, or four of us are going to move back to the United States. And that was kind of the beginning of how this was all going to unfold. My husband and I at the time, we were not going to get divorced immediately. We kind of had this agreement that, we were going to wait until our youngest daughter was out of high school and I was settled and, had gotten my footing. So that was kind of how we set this whole thing up, which may sound crazy, but I just wanted to get back to the United States because I no longer wanted to live in England. I didn't want to grow old there. And I really felt that I needed to kind of self-realize in my career. I did do some things in England. I had a fashion company and a few other things that were actually successful, but it wasn't in the realm of which I wanted to work. So I moved here and to California. And shortly after I moved here, the entire arrangement that we had agreed to blew up. He wanted to get divorced immediately. And this caused a real spanner in the works, as they say in England. It was just problematic for me because I wasn't expecting that. And we had only lived here 6 months. So the children were still getting acclimated. And I was just trying to get my footing, living back here after not having lived here for a long time. So we had a divorce, which was very contentious. I had to keep going back and forth to London for 3 years. And I had what they call the gray divorce. I was in my mid-50s. It was very contentious. And I realized as I was going through the process of the divorce that I had kind of lost the plot on our finances when we were married. And, coming from someone who has a background in corporate securities law and was an investment banker, you would think, oh, this woman's going to understand and have her finger on the pulse of everything going on with their finances. Well, it wasn't true. I was busy with the children. I got busy with other things. And I just figured, I just let him handle it. And in the end, that was very detrimental to me. I wasn't aware of certain accounts. I wasn't aware of a lot of things. As soon as he said he wanted a divorce, he immediately changed all the passwords on our joint accounts, blocked me out of these accounts. I had to get an interim order against him to just pay me some money while we were getting divorced. So my lack of understanding of, which accounts were out there and how certain things worked and not really reviewing our tax returns, that carefully all led to kind of my downfall in many ways. So again, we got the first decree after several years of going back and forth in the court system in England. I got the decree, which was satisfactory. It was enough to keep the children, going to their high school, private high school, and my daughter at Georgetown, and keep a roof over my head and allow me to have some space to start pursuing my own career goals. However, 6 months after that, he stopped paying the alimony, and I had settlement money, but half of the agreement was alimony. And that was a problem because he literally stopped working, claimed all kinds of things, took me back to court because he said he could no longer work and all this nonsense. Needless to say, after that second court case was done, he went immediately back to work. But that took a couple of years and I wasn't getting paid any alimony. there was nothing I could do, even legally. So during that time, it was a very, very stressful and fraught time. I was very stressed out. I was in complete fear that we were going to all end up on the street. I kept downsizing. I was selling jewelry. I was trying to do everything I could to get through the 2 years because I knew the court case was going to take forever because the court roster in London was just ridiculously backed up. Plus, it was incurring more legal fees. I had to get a barrister and a solicitor because there you need two. So I really was living in fear and I was paralyzed by financial fear. And then somewhere into like a year of this, I thought, I was trying to do some jobs here and there, consulting work, but I thought I need to really make getting a full-time job my job. So I swung into action. I applied for over 100 jobs. I mean, I was about 55 at this point. So it wasn't like there were people lining up saying, hey, we want to hire a 55-year-old woman. And even with my resume, which was very good, I went to Georgetown undergrad, Georgetown Law School. I worked at top law firms. I was still older and it was just, not happening. I mean, I got some interviews, but it took a long time. And finally, I got hired by Morgan Stanley to be a financial advisor, which was the best thing that ever happened. I wasn't quite sure about it when it started, but it was definitely in my wheelhouse of my knowledge background and all of the other things that I had done. So that's how I became a wealth manager. And I joined the Bahnsen Group at the time when we were at Morgan Stanley. And then we left Morgan Stanley and became our own independent advisory firm, which is now called the Bahnsen Group. And I am now a managing director and partner in that group. And I've been with them now 10 years. So you can do the math. I just turned 64. So the reality is that, this was a period that was really fraught with fear. So once my wealth management business began to grow and it really is a flourishing business and I love it. And I'm going to be doing it for another 10 years. Because I think it really feeds into my background and I have no idea what I would do if I didn't work. And honestly, I'm still playing catch up from a lot of things that happened to me financially, right? And this is a story of many women who have a great divorce. But as I was becoming more successful as a wealth manager, I thought to myself, I really don't want any woman in the entire world to ever feel the fear that I did. It's just not fun. It's very detrimental to your health. It's detrimental to your psychological mind state. And the reality is that we as women are so busy caring for children, caring for our elderly parents or other people in our family. We spend a lot of time not focusing on the things that are probably going to be the most important things to us, which could be our health and our finances. So that's how I came to want to create this platform. I wanted to outreach to women of all economic strata, not just my clients who, are a little higher net worth because obviously they need a financial advisor. But I wanted to do something in thought leadership that affected all women to give them guidance and inspiration and empowerment to figure out a way to build their net worth, their wealth overall, to make the right financial decisions, to understand how to speak to others in who they have relationships with, like partners, boyfriends, girlfriends, husbands, and how to protect themselves. So kind of on a micro level, how to deal with money in their relationships with people in their immediate lives and families. On a macro level, how to deal with it for their business, their choices in career, how to advocate for themselves, and to just really be proactive in this whole sphere of financial well-being.
Yeah. And I know that on your website, one of the things that you mentioned was the fact that, and you mentioned it when you were just giving the background. Thank you for sharing so much, because I think it does put it in perspective when people hear about your journey. It's not, what you're writing isn't just coming from theory, it's coming from experience.
100%. I mean,
right?
I spent so many 3 a.m., I'd wake up during that whole divorce thing, 3 a.m. every night, like my eyes would just open, like boink, and I'd be like, oh my God, it's 3 a.m. And I'd just go sit in my backyard and think, how is this ever going to end? Because I just didn't see how this was going to end well, and it was so scary. And that's when I was, starting this program, I thought fear is paralytic. And, I say in the book, 47% of women, do you still hear me? Okay. Somehow my screen went by. 47% of women associate the words dread and fear with thinking about their finances.
Oh, that's a large percentage.
It is.
And I think empowerment.
And so there is a need out there. Like, we're doing better, but there is a lot of information out there. But again, I think, when you look at like what happened in COVID and what they called the she session, right? A lot of women who left the workforce and didn't return right away, mainly because of the fact that they have to care for children, and their, remote work can be helpful in that regard. But it's a lot. And so when you're dealing with all these different responsibilities, being proactive about your finances probably doesn't seem top of mind, but it really should be, because it will make everything else go better. But yeah, fear is a horrible thing. And I personally felt it just viscerally for many years.
A couple things that stand out that I just sort of want to talk a little bit about, and we will also have a link in the show notes to the book. But I was reading through the contents of the book not too long ago, and in fact, it's a couple months ago, and then I just refreshed my memory just in preparation of today. And one of the things that stood out at me more today than I think in the past when I was reading it, and I think it's because over the last year, I've heard a lot from clients that are 55 or in that range. So let's just say between 52 and 58 that are having difficulty finding opportunities right now. So COVID, sent them either like maybe they were in consulting or they were in something like that. And the industry that they were in, I want to say let them down, for lack of a better word, because now they're having trouble finding opportunities, to get back to work. They're not ready to be done working. They actually could retire if they wanted to, but they aren't mentally ready to do that. And one of the things that stood out to me about what you were writing and what you were saying is, and I loved what you said about, I'm going to work for another 10 years, because sometimes people will say to me, how long do you think you're going to work? I'm like, I don't know. I love what I do. So I'll work as long as my brain will let me,
Exactly.
This idea of retirement, I guess is where I'm going with this idea of retirement that's out there that, 55 or 60 or 65, that's when we're supposed to retire. And I often say, why?
This is a very antiquated, anachronistic thought, I think. That was all based on lifespan. When they came up with this idea that people retire at 60 or 65, people had much shorter lifespans, right? Historically. And now, if you look at what's happened recently with some of the IRS changes, now you don't have to take a required minimum distribution on your 401k. Until you're 72, and then it's going to be 73 in 2023. Yeah. And then they're pushing it out in 2033 to 75.
Yeah.
So that, I think, is indicative of the fact that whether people have to work for financial reasons, and I think a lot of people do, to be able to sustain a lifestyle they want in retirement, and be able to travel and deal with increased medical costs and all that stuff, I do think people will have to work longer. But just from a psychological point of view, I read about a lot of people who have retired early, maybe they've sold a company or whatever, and maybe they're in their 50s, and then they always end up going back to work in some way.
Yeah. There's an encore career is what we call it. Yeah.
Yeah, frequently, and I think whatever it is that we all have to have a purpose in life. And I'm not saying work is the only one. You can get involved in charitable things, or maybe you want to become like a triathlete. I don't know. But for me, I need to feel purposeful and productive. And I think it also keeps my mind engaged. And I'm hoping, that helps me down the road with respect to other mental, not having a disability mentally when I'm 88. And I think it just keeps you young. Like I interface with a lot of young people in our firm every day. I'm thinking a lot about numbers and arithmetic and, all kinds of formulas every day. So that keeps my mind supple. But more importantly for me, like to have a purpose to get excited about, I would love to just keep writing and talking about all these issues as long as I possibly can, like whether you are a big Nancy Pelosi fan or you're not. I mean, here's this, 82-year-old woman who is extremely vibrant and articulate. And, I think that's a great role model just for longevity, and staying in the game. So I think women could definitely start some entrepreneurial endeavors if they cannot, if they are no longer in the workforce or can't stay working at the job they have. That can be exciting for them. And I think with perseverance, you can find appropriate work. It's not going to be maybe as easy as it was before, and a lot of times in your life, but it may depend on the industry that you're in. But I'm a firm believer it's good to stay in the mix. And I think we have to be realistic about the expenses in retirement. Honestly, if you want to, women live longer, their medical costs are going to be higher than men's. So that's something they have to think about. They also have to, make sure they've got or considered what they would do about long-term care if they needed to have care in the home or in a facility. If for some reason they could not take care of themselves or they get dementia or whatever. So that's an additional expense that needs to be contemplated. Because, I don't
We're
know.
usually the ones that survive, right? I mean, that's the statistics.
I think it's like 30% of people over 60 something are going to have to deal with some sort of care. So
and the definition.
That's something we have to think about, because the old amount, if you think about the amount of money that you need to retire, you need to really have your expenses at top of mind so that it can be a guidepost of how much money you need. And if it's invested, there will be market volatility along the way. If you're invested in a certain way, that could have more of an impact on how you take money out of your investment money, to survive. So I think it's not, a slam dunk anymore. I mean, if you retire and you're in your 50s and you have about $5 million, then, you should be able to stay the course. But I think people have to really look long and hard at the kinds of expenses that can crop up. And if people live well into their 90s, and I know I'm going through this with my parents right now, care can be very expensive.
And I think that it's not just about the expense, although that's a big piece of it, but I also think it's about the mental stimulation. And I have said many times that when I get to the point where I, don't want to do this work or don't want to do as much of this work, I just know I'm going to go do something else. Like I think it's important that you do keep the brain working and functioning, it doesn't need to stop. The clock doesn't need to stop. And I know that's why we always encourage people that have, that have really focused on their career for that is their hobby, that is their job, to start thinking about other things before they do retire. Because if you don't have those hobbies or something to keep your mind stimulated, that we see those be unsuccessful retirements, I call it. It's just, it doesn't seem like you could have
just
an
think about it. If you retire at 60, my grandparents died at 64, my age, both of them, and they were my mother's parents. Well, now my mother's 91, my dad's 93. Yeah. But just say you retire at 60 and you live to be 95. Well, that's 35 years. I mean, how much tennis can you play? So, I'm like, hey, to me, 70 is the new 40 and, 80 is the new 50. My dad retired fully from working at 85 and he, was still in it to win it. And he did it unwillingly, but he did it because I think he needed to kind of stop driving. But that was the main reason. But I am 100% in agreement with you. I think that, we need to take care of our health and we got to take care of our mind. And as, we are living longer, hopefully we are healthier across the board. I believe that we are. And, for women especially, I think staying engaged, it just gives you purpose and confidence and empowerment. You're not, you're really feeling purposeful. And for me, I believe a lot in just being intentional about everything I do. And also I have all these goals and desires of things I want to accomplish. So I actually feel like I'm just getting started. I'm going to be hanging around as long as I can. Just spouting off, saying what I think.
Well, I think it's important for people to understand that everybody has their own location. And I know that people, over the years, I'm sure you've had the same conversation where people say to me, well, when I retire, I'm like, no. Let's talk about how to build some of that into while you're still working. If you want to go on a European trip, let's talk about how to build that trip in, to your life right now, because we're not guaranteed anything.
Correct.
We're not guaranteed to be in retirement. There's just life is not a guarantee. So if those are the things that you want to do, if you had to work 1 year longer, but you could go ahead and get some of those things done now, I'm not saying overspend. I'm not being unrealistic about it. And I definitely believe in saving for retirement and having that, because sometimes we're forced to retire early or forced to retire.
And I've had a number of women this year who've become my clients because of that situation.
Yeah.
But I agree with you on that. It's funny because you're touching on a point that I've been pondering a lot over the last year. And, I want to travel. I love to travel. So travel is one of those things that I like to do. So I've made a commitment to myself that, I'm going to take one really good big trip a year, and I'll do other things, throughout the year. But I'm not going to not do that because I'm working. I will plan for it. I'll fit it into my schedule. I'll plan for it financially. But I want to still live my life. So working doesn't mean you're not going to live your life. I think some people think when people look at retirement, they just think it's like one big long vacation, which it could be for some. But I think there's a way to, have your leisure time and do the things that really help you to relax and get your interest engaged. But then that will motivate. Well, in my case, it just then refreshes me, and I want to come back and, do what I do. So I'm not going to wait and try to, fit everything in when I retire. Maybe I'll travel more. I don't know. But I think, you should definitely try to find that balance. And that is about it. It's a marathon life, right? Hopefully it's a long marathon. So you want to be able to, get, your fulfillment from all these different baskets, So I agree with you. I think a lot of people say, I'm going to do this when I retire, I'm going to do that. No, seize the moment, carpe diem, live in the day. God gives you each day. It's a blessing. Fill it with everything you possibly can.
Mm-hmm. Mm-hmm. And I also wanted to point out, again, just kind of referencing back to your book a little bit, one of the sections that you go over is investing. And over the years, I've been in the financial planning services or financial services industry since 1994. So going on 29 years actually this month. And one of the things that I've heard over and over and over again is investing is scary. I don't want to lose money. Those are some of the phrases that I've heard. And this year in particular, I've been reminding clients, we've been really fortunate. I don't know about you, but we've been super fortunate in that our client base has heard me over time say that when markets correct, that's a great time to put extra money to work. And so our clients have been really great about calling me saying, now you told me that when markets correct, I'm supposed to put more money to work. So it's been wonderful in that sense. But there's still a whole process about getting people comfortable and particularly women comfortable with investing. There's a fear of it. In my experience. And I know that that's statistics too. It's not just me, in my experience, there's statistics out there that prove that. The chapter that you have, I think it's chapter 7, if my notes are correct, is about investing. And the way that you phrased it was that it's the catalyst for financial independence. And when I read that title, I thought, oh, that's the way people need to think about investing as a catalyst, not as scary, not as, volatile, but as a catalyst. So I love that phrase. And I'm sure in your experience too, you're probably thinking the same thing.
Well, I think the thing is that, investing by definition is kind of like, for some people, just like the black abyss. They don't know anything about it, or they're a little bit afraid of it. They watch movies and they hear, all kinds of stuff on Fox Business and CNBC. And so there's just like a lot of information that's just being bombarded to people that is often not correct. And most investors, in my opinion, all investors should look at investing as a long-term proposition, right? So no day trading, no trying to turn around a profit in a month or two. Over 90% of people that do market timing don't make money. They lose money. So you have to look at it as a long-term proposition. And also there are ways, you can try to do it yourself. And there's definitely a lot of education out there that you can get on the various platforms. But there are some, strategies that I do go over in the book that you can adhere to that will minimize, the risk of permanent capital loss. So nobody wants to have permanent capital loss, but there will be volatility along the way, which means prices will go up or down. But diversification is very important, and thinking about your risk-adjusted return is probably the most important thing you can do. So in the past couple of years, over the last 10 years, there's been a bull market. A lot of the technology stocks have done very, very well, but they've been overpriced, and, they have leverage. So when interest rates go up, they get affected by it, which is why they've tubed, because they have leverage, they're overpriced, and the market is saying in the future it's going to cost them more to do business because interest rates have gone up. So if people had a lot of their investments in this kind of one sleeve, then that, could mean that they were really hit hard maybe in their 401k if they were really overweight technology stocks, or they were really kind of almost in sync with the S&P index. So you need to diversify. You need to have a combination of equities, some debt, and you also need to have maybe some alternatives. We believe a lot in alternatives, which are investments that are not correlated to the market. But we at the Bahnsen Group, and I'm a big believer in this, with respect to equities, we like to focus on stocks that pay dividends and grow dividends. So paying dividends isn't enough, and growing dividends is the key. So that allows you to keep pace with inflation. So, for example, if you're going to be taking money out to live on in retirement, and you can have a yield of 3 to 4%, say, not return yield's different than return yield is income production. If you know that is a fact that isn't going to be changed by price volatility, then it allows you to get money out of your portfolio without selling positions and, experiencing permanent capital loss. So there are ways in which to invest that will, decrease the dread and the fear, and can reduce the volatility of your portfolio and reduce permanent capital loss. So you just need to follow certain precepts. And if you're looking for an advisor, then you need to just, I do talk a little bit about that as well. Just make sure, that you check into the advisor's credentials, you talk to some of their other clients, they have an independent custodian, and you do your homework and your due diligence before you hire the advisor. I mean, obviously, I'm going to say having an advisor is a great thing because that's what I do. But you do need to do your due diligence because, it's a wild, wild west out there. And a guy who works in an insurance company or a gal can say they're an investment advisor, but they really might not know anything about portfolio management. And they're kind of subbing out all the portfolio management to somebody else. So it's a very nuanced business, but I think, if you don't invest, so I would always say, make sure you have your emergency fund in order, have all your debt down, and then max out on your 401ks and your IRAs. After you do all that, if you have any extra money, then you can start to invest. And there's ways to start without having billions of dollars. You can start with a lot of the funds. I talk about it in the book, to start small. And as time goes on, then you can start buying individual positions and move on from there. And then I also think financial planning is very important. Having a financial planner kind of map out your course with some cash flows through the course of your life to the age of 100 can help you make decisions about what you should be doing, and also show you at the moment in time when you do it, where you're at and what you need to do to be able to live in retirement in the way that you want to.
And I think to your point about a financial advisor, and you were kind of saying, the term itself or the title itself, unfortunately, is not really a regulated title. So a lot of people can use the term financial advisor, and they may not be that overall, like what you're describing as a financial advisor, right? So there's a difference between somebody who is, and by the way, I just want to say, like, we all have a purpose. Like, I don't want anybody to think, oh, she's crushing on a particular type of person or anything like that. But if somebody is an insurance person, that's their focus, let's say that they focus on insurance 100%, then they're not a financial advisor. They give financial advice on insurance, but they're not what we would describe as a financial advisor. So I love the comment that you made about doing your homework and really deciding what it is that you need. What do you need assistance with? Do you want I kind of always say to people, well, if there's financial planners, there's wealth managers, there's insurance agents, there's CPAs, they're all different pieces to your financial life. What are you really feeling like you need help with at this stage of
And I
your
think
life?
you can find an advisor. I mean, what I'm finding is when I have clients who come from the insurance world, where the advisor was at, an insurance, primarily insurance company, they have a lot more annuities than they need. I'm not a big fan of annuities, period. But I think the people that make the most amount of annuities are the people that sell them to you. They're expensive, but they're appropriate for some people, but not for most. But I think, what you want is to try to find a holistic advisor. So for me, the way I do my advisory business and the way the Bahnsen Group operates is, regardless of whether you have 500,000 or 200 million, way we want to approach this is, we can do family office work for ultra high net worth people. So that's a little more in depth. But for every person, we want to do an audit of their general financial situation. So we're going to look at, what is their investment profile at the moment? Do they have insurance? Do they have long-term care insurance? Do they have a life insurance? What is their tax situation? And then, we try to, and we also talk to them about their estate planning. Do they have any? Will they need any? Everybody should have some estate planning, regardless of how much money they have. And so we actually do a holistic audit of all aspects of their financial lives. And from there, we guide them and we can connect them with other professionals that can help them with that. And we'll certainly work with them as well. So try to find an advisor who is holistic and can really look at all aspects of where you're at and then guide you through this with a view of your whole orbit. You know what I mean? Because it gives you a better way of giving people advice in piecemeal. So we are very holistic in our approach. And there are a lot of advisors out there that, follow that kind of paradigm.
Yeah. Well, I was going to say, I think you're one of the only other firms besides ours that actually has said something about like a financial audit. The number of people that I've interviewed over the years, the number of other advisors that I've interviewed over the years, their process for whatever reason isn't to start with that audit. And I think it's changing and I'm excited about that, but it's really rare that that's the initial process. And I guess because I've been doing this in you too, for a long enough period of time, that it's foreign to me not to start that way.
The thing is, if you go back in time, right, the old school way of the wirehouses, like the Morgan Stanleys, Merrill Lynch's of the world, and just in general, back in the day before, I would say in the 80s and into the 90s, even
into the 90s. Yeah. When I first started. Yeah.
It was like stockbrokers, right? So it was a very transactional business. People would call you up and say, hey, I've got this stock. I've got this bond. I want to buy it. Do you want me to buy it? And then they'd get a commission on it. And that's what this business was. It really was a transactional business. It was the buying and selling of investments, people making a commission, calling you up on the phone. It was just strictly really, and then I think it morphed into like more just portfolio management. So you'd go to somebody, they look at your portfolio and they might be a portfolio manager, but they would just be strictly looking at your portfolio and not looking at all the other aspects of your net worth or where you're at in your life, your career, how, the whole thing. And now I think as time has gone on, especially, with our independent, like we're a fiduciary. But when we were at Morgan Stanley, we couldn't really say we were a fiduciary because we couldn't be, because we were on a platform that would present a conflict of interest because there's product that they sell on their platform, right? So now there's this business of fiduciaries that's evolving, which I think is making it more holistic. So we're kind of a combination of wealth management advisor, but we also do family office work. So we can work with multi-generational families and we adhere to a fiduciary standard because we're independent and we don't have any conflict of interest. So we can actually put ourselves out there as fiduciaries. And so when you are looking for an advisor, I would say, try to choose one that can sign a contract that says that they will act as your fiduciary.
Yeah. And a lot of companies have it right on. It's not a lot. I shouldn't say a lot, but a few of them have them right on their website now. You can click right on, it'll have like the like a quote unquote oath or some kind of agreement, and also look for it in their language sometimes within the agreement. So thank you so much. I have to say this time has gone so quickly and I've so enjoyed this conversation. For anybody who's interested, you can go out to Kimberlee's website. We'll put it in the show notes so that you have access to it. But if you're listening and you want to head on over there right now, it's fiscalfeminist.com. There's a great book you can get on Amazon and some of the other retail stores. It's called The Fiscal Feminist. It's a financial wake-up call for women. Kimberlee Davis, thank you so much for being on the show today. And it's just been such a pleasure talking to you. I feel like we could go on for hours. I think there's going to be a lot more to come from you. And there's also, by the way, some great resources out on her website. She also has a podcast that's out there. There's a podcast page that's out there. So you can listen more from that perspective and dig into some additional information. Again, thanks so much for being on the show.
Well, Amy, thank you. It's been an absolute pleasure. And I hope people do check out the book, The Fiscal Feminist, A Financial Wake-Up Call for Women. If you do read it, I would appreciate a review on Amazon if you don't mind taking a few seconds. Good or bad, just like to hear everybody's thoughts. And I appreciate your taking the time to talk to me today. It's been great fun. And now I've got Hitching Post wine on my mind. It's Friday. It's approaching noon. I'm going to work for maybe another 4 hours, but tick-tock to the Hitching Post. I'm getting close.
Might have to go see if I can't find that in one of the local wine stores or have some shipped even. Well, thanks so much. Thanks for listening to the show today. We hope you've enjoyed this episode, and we would love it if you would share this with your friends, rate us on iTunes so that more people can find us and find the assistance that they want in their financial life. Thanks, everyone.
And that will about do it for today's episode of Wine and Dime. You can contact Amy through the website, www.rootedpg.com or amy@rootedpg.com. You can also follow us on Facebook and Instagram at RootedPG for the latest news. And if you have any questions, comments, or topics you would like to hear about, feel free to let us know. And don't forget to rate and subscribe the show wherever you get your podcasts. And again, thank you for listening, and be sure to tune in next time.